Hi there, Jake Bernstein at the Money Show in San Francisco with Dan Turner, who manages money.
Yeah.
I went by Dan's speaking room before, saw a whole crowd of people. What were they interested in? Tell me what you do.
Well, I manage money for folks, and the thing that really separates me from most money managers is that I'm not afraid to go to cash, first of all, and I also use a technical methodology or process to know whether or not to be bullish, neutral, or bearish. And what that means is that we're in the longest bull market in history, and everybody realizes that that's not going to last forever. And the real question is whether or not you can be prepared for that. Do you get out of the market now? Do you say, well, I'm going to wait for the next crash to occur and then I'll get back in? I mean, we could have a bull market right now that could go on for the next year or two and that go a lot higher than where it is. On the other hand, as of this past Friday, that could have been the market top, and the crash could be underway right now and we not know it. What I do is I believe this. I know exactly how long this current trend in the market will last. And then everybody says, well, how can you possibly know that? Nobody knows that. Well, the way that I know that is that I know that the market will continue on its current trend until it doesn't. And so it's my job to measure when that doesn't occur.
And then when that doesn't occur, what do you do?
When that doesn't occur, the first thing I do is I go to cash.
Right.
Okay? So, because what happens is the market will top, it'll move down into what I call a transition zone. In that transition zone, that's the highest risk time in the market. You don't know whether the market's going to suddenly reverse and go back up, or you don't know whether the market's going to continue on down. So at that point, I go to cash. Once it goes through my transition zone, which is really nothing more than a 200-day moving average plus or minus one standard deviation of normal volatility. So I've got a band here that I look at the market. When it goes below that band, I start legging into a bear market strategy. And what is that? I typically buy inverse ETFs.
Right.
I buy the inverse of the Dow, the inverse of the S&P 500, the S&P 400, the NASDAQ. I go into those inverse ETFs, and I stay with those until the market bottoms. Now, how will I know the market bottoms? I won't know when it will bottom.
Right.
I will know when it has bottomed. So
Sure.
once the market bottoms and it begins to move back up again, I will detect that movement. The first thing that will happen is it will stop out of all of my inverse ETFs.
Right.
Then it'll move back into my transition zone. I'm in cash now, and once it goes back above that, I'm back bullish again. So it's really all about measuring. There's a lot of people think that timing the market is a fool's game because you're trying to guess market tops and bottoms, and I don't try to do that. What I do is I measure the market. I measure where it is, not where I think it might go, and the market will always tell you whether or not the top of the market has occurred or the bottom of the market has occurred. Yes, there can be false indications. Yes, there can be some whipsaws. But in general, in fact, I've tested this from 1929 forward. In all cases, if you measure the market based on that 200-day plus or minus one standard deviation of normal volatility, you'll know whether or not the market's in a bull or bear or neutral condition.
Dan, what other technical indicators do you use in your work?
Well, the technical indicators I use primarily these, and this is a very important point. A lot of folks feel like that they want to look at an individual stock or an index and then decide whether or not they want to be in it based upon a lot of criteria. Maybe it's the sector, maybe it's the industry, maybe it could be any number of things. What I do is I look at the overall market. The market tells me whether or not I want to be in or not. Maybe you want to own Amazon. Well, I'm not going to own Amazon unless the market's moving up.
Right.
The market puts me in front. What is the market? The 5 major indexes, S&P 500, the 400, the NASDAQ, the Russell, and the Dow. When those are the major indicators, they tell me everything.
Right.
It doesn't matter. So the point of it is that it's important that you use math to make these determinations. You don't use opinion. We can all guess about what's going to happen in the market.
Dan, I hate to cut you off. You've given us some great answers. We're here at the Money Show with Dan Turner. We'll continue after the break. Thanks for being here at the San Francisco Money Show.